Well, it just started raining, but we're doing it. So Shopify is where I started yesterday, and I'm looking at Shopify, and I've got Main Street data pulled up right now. And I'm looking at the EPS on Shopify. This is quarterly. Now, just to talk for a second, why, looking at that, you wouldn't think they have profitability figured out on a shareholder side, right? Some negative quarters, negative EPS, and you need, the earnings per share. That's what's going to pay profits if there's dividends in companies ever, right? Long term, for this type of a company, I think, it could be a big player, like paying dividends in 20, 30 years. I don't think we look at tech right now for dividends ever usually, but this is for growth. But why do I like this if it's for growth? Because when a company is still getting its footing, when it's still getting its business established in the market as either the leaders, so say Uber and Lyft, they had to spend a lot, they had to take a lot of time to get those footholds to become those market dominating names that you know of. So you just think you're going to Uber somewhere, you're going to Google something. Shopify's been on that track, like I was saying with them as a website e-com. So I like when I haven't seen them hit their stride yet. That's the lesson here. To be early and to be an investor who's early on the good companies, you have to be looking for them when they don't have attractive multiples. If they looked good, this is where the academic mind and what they teach you in finance, or in school especially, they're looking at these valuations and these multiples, and it's helpful. I want to say it's traditional, a little archaic, like the way fundamentals and valuation on a company, on a business in the 1980s might have been ran. It's so different now. Like, everything changes so fast with the tech that we have, and this is tech. So I like seeing when there's a business that's for sure going to be around. They've won in their platform, and I like that they haven't hit their stride as a business for an investor side yet. When they do, when they've kind of achieved that critical mass and they are the number one player, or number one or number two even, that EPS becomes pretty consistent and smooths out. So that's what we're going to like, because when everyone starts seeing that, then they'll pay more, and we've already held the shares. All right, talk to you later.